Over the years, we've seen so many buyers make these mistakes once they've gotten into contract and causes a lot of stress and can actually disqualify you from your loan. Hey, my name is Rose Gonzalez with the Gonzalez Real Estate Team, and in this video, we're gonna talk about the 10 things not to do when buying a home. These are things that you don't wanna do once your offer has been accepted by the seller and you're in escrow. Because what we don't want is for you to do something without knowing that you can even jeopardize your home purchase. The home buying process is already stressful as it is. You don't want to open an extra can of worms throughout the process. So let's get started. Number 1, don't change jobs, become self-employed, or quit your job. In order to qualify for a mortgage, you'll need to be in the same line of work for at least 2 years. Let's say that you were a W-2 employee and you wanted to start a business and become self-employed. If you leave your W-2 job and you just started your business 4 months ago, the lender can't use that income. They'll need to have 2 years tax returns or 2 years of 1099 to prove that you've been self-employed for 2 years. This is the same if you change trades. Let's say that when you got pre-approved, you were working for a company as a customer service rep, but you stayed at this company and switched into sales. You're switching your line of work. But if you change companies and stay as a customer service rep, they can still use your income because you're in the same line of work. Now, if you move to a company that pays less salary, but are giving you a quarterly bonus, you want to make sure that you consider doing this before you close. Bonuses will also need to be 2 years. So you don't want to get less salary and bank on your bonuses to help you with the loan if you haven't been getting bonuses for 2 years. One exception to this is that if you went to school for your line of work, let's say that you're a doctor and you've only been working at the hospital for 1 year. But of course, as a doctor, you have had to go to school. Well, the lender can use your schooling as part of your 2 years work history. Now, if you got into sales and went to school as a civil engineer, you may want to talk to your lender about that. These next few ones are related to your credit. The lender will rerun your credit right before the wires are funded to the escrow company the day before closing. So these next few are very important not to do until you have your keys in your hands. So number 2, don't buy a new car. Believe it or not, I've had a buyer who actually went and bought a car a week before we closed. They signed docs and thought they were in the clear and bought a car. Now, you don't want the lender to find a $500 a month car payment, which puts you out of your debt to income ratio, and then you no longer qualify for your home. Number 3, don't let your accounts fall behind. Getting behind on your credit card payments will cause you to be delinquent and can affect your score. Lenders have a threshold of credit scores that they cannot go below, and if yours drop within 1 point, that can actually cause you to get disqualified for your loan. Number 4, don't buy any furniture even if the payment is deferred after closing. I know that it sounds super tempting to get a 0 interest, 0 payment for a year, but you still don't want to do that. Anytime someone runs your credit report or add a new loan, it will decrease your credit rating. Number 5, this one doesn't really make sense as to why, but don't pay off large balances and close any credit cards or accounts because your overall utilization will lead to a drop in your credit score. Number 6, don't allow any additional inquiries on your credit except for insurance purposes. As I mentioned before, anytime someone runs your credit, that's an inquiry and can drop your score. If the lender requires a 680 and your score drops to 679, you could potentially not qualify for your loan or may need some type of exception from the lender. Number 7, don't spend any money that you've set aside for closing. I feel like I don't even need to explain this, but you know what? Let's just do it. I would recommend putting your money for closing costs in a separate account just so you're not dipping into it. I know that when I run my card through that ATM machine or the store, I'm not taking into account anything I'm spending my money on. Just be careful, especially if you don't have any extra funds to spare. Number 8, don't make any large deposits without first checking with your lender. Most of the time, if you're doing large deposits, the lender are going to ask you to paper trail where it's coming from. You want to make sure you paper trail it, otherwise it can affect your approval. Let's say that you just got married and you guys received a bunch of monetary gifts. You could paper trail that and write a letter of explanation to the lender saying that you guys just got married and these are all gifts. They'll accept that. Also, gift funds are okay too. Let's say grandma wanted to love on you and give you $50,000 to help you with your home. The lender will need proof that was from grandma as a gift. Grandma will need to provide a bank statement showing the money that was in there and a gift letter stating that she's giving the money to you and that it's not a loan. Now, if you're self-employed and get commission checks, let's say you got a $10,000 commission check, you want to make sure that you keep your invoices, stubs, or anything that proves that is part of your business income. Number 9, don't change bank accounts. This is not necessarily a deal breaker, but you'll need to show the lender a paper trail of the money coming from one account to the other. Part of the qualifying process is to show your bank account statements for 2 months. This just adds an extra step to showing where the money came from and that it was transferred from one account to the other. Number 10, don't co-sign on a loan for anyone, no matter what. And be sure that if you're already a co-signer for anyone, talk to your lender and see if the debt goes against your debt to income ratio. There may be some situations where you co-signed for someone a long time ago, but you can show a paper trail that someone else pays 100% of the payment. But check with your lender because each lender underwrites different rules. The main thing is to remember that when you're in the process of buying a home, just be very, very cautious. Don't do anything big, and if you're unsure, ask your lender or your agent for advice. And when in doubt, just wait until you have the keys to your new home. It's always better to be safe than sorry. I hope you found this video helpful. If you have any questions about the home buying process or anything in general, make sure to comment below or send me a message and I'd be happy to help. And of course, if you haven't subscribed to our channel, go ahead and get a little love to that subscribe button, as we always try to give out as much value to all of you guys during the home buying process.